Hi traders, welcome to another episode of Let's Talk About a Stock. And today I want to talk about Chipotle Mexican Grill. So the ticker symbol is CMG. And I wrote down here, restaurant business is changing. So usually I would not trade a restaurant stock. So of course there are some exceptions, but restaurant stocks are more or less conservative stocks, and it's very rare to find a fast-growing restaurant stock. So, but I think there is something going on in the restaurant business, and the base for the change is digitalization. So, and we will see that with the example here from Chipotle, that they today generate 50% of their sales over digital channels. And that is changing everything in their business model. So let's first look at the chart from Chipotle before we come to the earnings presentations and also look at the digital sales. So first of all, let's look at the weekly chart from Chipotle Mexican Grill. So you can see a very strong uptrend here. So the stock is coming from around 250 US dollar and is currently at 1,932. So a very, very strong rally, and you can also see the correction here during the fast and short COVID-19 bear market. So the restaurant stock here corrected from the high was 940 and the low was 415. So more than 50%, and it reversed very quickly. In only a couple of weeks, the stock printed a new all-time high. So, and then we saw a very steady uptrend here, and then another big consolidation with a cup pattern here, and then a gap up here to the upside when the earnings were released. And then you can see here a tight area, so that means the prices did not change so much over the last weeks, which is always a sign of support. So nobody is selling the stock, everybody waited for new buyers which come into the stock. We will look into the daily chart in a minute. On the other side, if you look here at the volume, for example, you can see a volume decrease over multiple months, and then a very strong volume on the or in the week of the release of the earnings. That was a new volume high for multiple months here, and that is always a sign for very strong demand. So let's look at the fundamentals and other technicals here from Chipotle Mexican Grill. So you can see an IBD rating of 92. So that means the stock outperformed 92% of all other stocks tracked by IBD in the last year. And you can see we have a market cap of 54 billion. And we have a very low number of shares on float. So only 27.9 million shares on float. So that is a very low number, and that helps you if you look for strong stocks, or if you look for stocks with a high potential for strong up moves, because there is little supply. So if you are, for example, a mutual fund or a hedge fund, and you want to buy a couple of 100,000 shares from Chipotle, it is very hard to do that. So, and there is only a very low supply in the market, and that also shows you that the stock was not splitted so much in the last years. So it's very rare to find a 54 billion US dollar stock with only 27 or 28 million shares afloat. So that is very rare. When we look at the yearly EPS here, you can see very strong numbers. So Chipotle was able to grow the EPS here in the last year. So coming from $1.28, then $6 US dollar and 60 cents, and $8 dollars and 88 and $14. And then there was a dip here because of the COVID-19 situation. A lot of restaurants were closed, and there was a dip back to $10. And then here in 2021, the estimate is 138%. So a very strong EPS estimate. And also for the next year, the EPS estimate is 31%. So that is very rare. If you now look, in your screeners and at a lot of other stocks, it's very rare to find stocks with a 31% estimate for the next years, especially in growth stocks. So that's what I think makes a stock very attractive, also from the EPS side here. So we have very strong EPS estimates. So the analysts expect a good next year and also a good 2021. So when we look at the IBD ratings here, so you can see a 98% EPS rating, which means stock belongs to the top 2% of the stocks in the EPS rating, or CMG is belongs to the 2% best 2% stocks or outperformed. So that's the right wording. Outperformed 98% of all stocks when it comes to EPS. So that is very good. Also a good group relative strength. So restaurant stocks are in favor of the market right now. Then accumulation distribution rating is also something I look at. So A+, that's the best rating. Composite rating, so that is a proprietary rating from IBD, is 99, so the best rating itself, and also other ratings belong to the top ratings here. So when we look also cash flow here, cash flow is very high, $26, so that's more than the 21 estimate, which shows you, okay, the stock or the business is very liquid. Then also we have a rising number of funds here, so more funds add Chipotle to their portfolios here. That's also a good situation because that creates demand. And when we now look here at the quarterly EPS and quarterly sales, you can see an acceleration here in the last quarters. So the stock came here from -2% in 2020, 74%, and then over 1,000%. So a very strong acceleration here in EPS. And you can see the same here in the last 3 quarters, also in the sales. So sales were up 12% and 23% and 39%. So the business is running, and we see some accelerations here, which is also a positive sign, and shows that the business is working itself. So when we look at the funds which already own Chipotle Mexican Grill, so we see some institutions are already in the stock, and some fund managers I personally track. So Contra Fund, but Contra Fund is a very large fund. Fidelity Growth has a small stake, but overall the stakes from my favorite funds are very small here, only 0.112%. So that is not so much. But you can see, and this is important, we have a very, very low float here, only around 28 million shares. So, and you can see when now a fund like Edward Growth Institutional or Fidelity Growth or American Funds Growth, when they put 0.33% of their portfolio value into a stock like CMG, that means they own 2.1% of all shares from Chipotle. So because the fund is so big and there is so little supply in the market, they have to buy a big stake in the company. And that is something you can see here when you look at the funds. So let's look at the daily chart here. In the daily chart, you can see the stock broke out here on earnings. So we had a breakaway gap. So a breakaway gap is always a situation where the stock broke out of a base, of a sound base with all the characteristics you want to see, but gapped up. So, and that was on earnings here, and the stock gapped up and gapped out of the base. So I personally never buy any gaps inside a base. I always buy breakaway gaps. And then you can see a direct follow through here over multiple days, and then a small consolidation, and now the stock moved higher here. So the volume itself is very low. So we see we have something like a volume dry up here, but on the breakaway gap the volume was very, very strong. So that was 355% of the average 50-day volume. So a very, very strong breakout, and I bought the stock on the breakaway gap directly and added to it on the way up a little bit, and also now on the breakout here of the situation. And if you now look here at the pattern itself, so you can see there's something like a consolidation. So this is nothing more than a flat base, or maybe something like a cup or whatever. So in the end, that's not important. So it's not important what is the chart pattern or the correct the correct interpretation here of the chart pattern. It's much more important that the chart is tight, show very little volatility inside, that you see a lot of accumulation going on. So when you look here at the volume bars, so you have a lot of blue bars above the red line here, so that means above the 50-day volume. So that is important for me. And then of course when the stock is breaking out, that is the time to buy it. But you must always have in mind, so institutions, they are not buying a chart breakout or whatever. So they look at the fundamentals, and they either already own the stock or want to own the stock. And when they see a restaurant stock growing so fast here in the last quarters, and also have very good estimates, and they maybe talk to the management or whatever and have a lot of trust into the business, then they are buying it on the day of the earnings presentation, because there is so much liquidity on that day, and you can easily buy a larger position. And that creates those chart patterns. So that creates those breakaway gaps, and also the support you see around the black line, so around the moving average 200 here. So every time the stock pulled back here to the black line, institutions came into the stock and support the stock here. And that is created by the institutions, and that's not created by the chart itself or whatever. So institutions want to own a stake in Chipotle Mexican Grill because the business is running and they see a lot of potential in the next years, and that is why they buy the stock, and not based on the chart itself. So that's why it's so important to look at the fundamentals and also at the story itself. So I made some notes here, but we will jump into the presentations here from Chipotle Mexican Grill. So you can go to the investor relations website here. And let's click here on the home button. So then you are in the investor room from Chipotle Mexican Grill, and you get all the information you need. And I personally, I look here into the last quarterly earnings report, and I want to go with you through the last quarterly earnings report. So first of all, so the highlights here: revenue increased 38.7%. So that's a very good growth rate for a restaurant business. Also the comparable restaurant sales increased. So that means when they open new restaurants, of course the sales are growing, but they also have a metric to compare the same number of restaurants from the last year to the current year. And that also increased 31.2%, so that's great. And the first thing I really find interesting was when I read that they have digital sales and they grew by 10.5%. And is now 48% of all sales. So, and you must really look at the business here. You have a restaurant business. That means you have a lot of restaurants in the United States here. And now they are generating 50% of the company's sales via digital channels. And I think this is the real revolution going on in the restaurant business. And that's not only Chipotle Mexican Grill. So also other restaurant businesses are increasing their digital sales. And digital sales means delivery service. That means also that people are buying in a restaurant via an app. And also use digital terminals or whatever. So, and what is the effect of that? So, what is the impact for the business? And the impact is very simple. You produce less costs. So the operational costs for restaurants are smaller. So you need less stuff. You have more efficient processes. And the customer has a higher convenience with the apps, etc. And that leads to higher margins, and that leads to more profits. And especially when you look at restaurant stocks, they all generate profits, so they are very profit focused. And when you can increase the margin itself, so that helps you to generate more profits. And I think this is something which is super, super interesting when we look at restaurants business and the digitalization of the restaurant business itself. And I think the impact from digitalization to a brand like Chipotle is much more interesting than for delivery companies or meal delivery companies. You know, when we look at a company like DoorDash, for example, or other delivery services, so they are only between the restaurant or between the brand and the client. And if you are a very strong company and you have a very strong brand recognition, so like Chipotle, like McDonald's or whatever, so, and you don't need DoorDash, you don't need any delivery service between. If you are very clever and if you have a good digital strategy, it's not a problem to create a delivery service, to create a great app, to provide a good service, etc. And there is another very interesting thing about having an own delivery service. You can control the service quality, and you can also control the brand recognition or the brand presentation. And that is super important for a company like Chipotle. So when you order your meal at DoorDash or other services, DoorDash itself, they control the brand and they have an impact on the brand experience and how the customer recognize or how the customer feels or experienced the brand like Chipotle. So when somebody, an employee from DoorDash is coming to you and they give you the meal from Chipotle and they have a delay or are not very friendly to you or similar, that has an impact on the brand of Chipotle. And that is something where big brands and very famous brands have a huge problem. They don't like that. They want to control the brand experience. And that is why they all are interested in creating and growing their own digital channels and creating own delivery services. They are not interested to make business with any third-party delivery service. So, and a big brand like Chipotle or other brands, they are able to create those services. So, and in the end, third-party delivery services, they only offer one business advantage, and this is they can reach a very large audience. So, and if you are a small business, that's good for you. But if you are a big business, that is nothing you need, because you have a very known brand, and it's very easy to reach a lot of people. They have own marketing departments, etc. I personally think that the digitalization of the restaurant business will help the big brands to grow, and they only grow or will grow when they are very clever, because people want to eat Chipotle or McDonald's or Shake Shack or whatever meals at home, and they order in the Chipotle app. And if they are able, they will not use a third-party delivery service. So that's my personal opinion and my interpretation of the potential here. So I'm more a fan of owning Chipotle than owning DoorDash, for example, or other delivery services, because I think the big brands, and people want to buy from the big brands, they are able to create their own digital services and delivery services, and that will drive the margins. So, and we see that here if we look at the other metrics here. So operational margin was 13%, so that's a little bit lower. Restaurant level operational margin was up strongly, so 24%. The reason was also price increases itself. And they opened only 56 new restaurants. That is a very low number. I think they own over 2,000 restaurants, and 56 is not so big. So, and that's not a huge number. And but they don't have to, so they can grow their business also via digital services. And maybe in future you don't need a restaurant at all. The only thing what you need is good supply management, so that you are able to transport all the groceries and all the things you need to create those meals to kitchens. And the kitchens, they cook the meals and deliver them via an own service. So restaurants are maybe not needed in future anymore to get the same quality from Chipotle. So and let's look what the CEO said here. So Chipotle's second quarter results highlight the strength of our brand and our people, as we demonstrated growing momentum in the business. So brand is very important for them. So we remain confident in our key growth strategies and believe they will help us achieve our next goal of 3 million average unit volumes with industry-leading returns on invested capital that improves as we continue to add Chipotle lanes. Strong restaurant level economics combined with significant restaurant growth should allow us to optimize earnings power for many years to come. And that is important, and that is also what I already said. So growth strategies. Then they talk about earnings. So that is here in focus. So it's not in focus to grow the sales extreme. So they want to optimize the processes and they want to generate earnings as a company here. So then they talk also about COVID-19 here. Then you can read a little bit more in detail here. And let's look here at the digital sales. Digital sales grew 10.5% year over year. So 48.5% of sales. A little more than half of the digital sales were from order ahead transaction, as guests increasingly appreciate both the value and convenience offered by this channel, as well as added convenience of more Chipotle lanes. So, and this is super interesting. So convenience, that is a big factor in digitalization. So people want an easy way to order their favorite food. So, and I'm very sure that companies like Chipotle can offer that. So, and then they open 56 new restaurants. That's not so much if you look to the number of restaurants, 2,853. So very low number here of new restaurants. But I'm personally, I think they really will focus on increasing digital sales in future, and that will also help them. So restaurant level operation margin was 24.5%, an increase from 12.2%. So a big increase here in the margin. The improvement was driven primarily by leverage from comparable restaurant sales, including menu price increases, low promotional activity, as well as lower beef prices. So they benefited from different things here. Lower promotional activity. That's of course if restaurants are closed and you don't have to make so much advertising. That also will drive your margins, of course. So, and yeah, then they also talk a lot about their earnings itself, and but I personally think, and this is super important, that they really will grow their digital sales. And also when we look at that here, so digital sales represent food and beverage revenue generated by the Chipotle website, app, third-party delivery aggregations. Digital sales exclude revenue deferrals associated with Chipotle rewards. So website, app, these are the focus in the future, and they will definitely grow the business over those channels. And I think one thing is super interesting, and you can see that here, that there was some PDF they offered at the website, and this is the delivery service revenue they generate from the app. So that is what they generate from the app and the website, and also delivery services. And here you can see the big growth. So 2019, from 2019 to 2020, so that is not a huge time span here. They grew the digital sales from 5,500 to 20,080. So that means I think that is millions, in thousands. So 20 millions. So, and that is a huge growth. So, and you can see that they were able to increase it quarter by quarter. So people are using those services. So, and that will help the business to grow very quickly. So let's come back. So I talked a lot about digitalization, and I think this is what makes those stocks currently so interesting. It's not only the opening of all those restaurants. No, they generated a lot of new clients, and people, they experience the convenience of ordering their favorite food from those big brands and enjoy that at home. So that is what is interesting here. And when you look here into the retail restaurant itself, so there are a lot of brands you already know. And when you look here, let's look at, for example, here stocks like Wingstop, for example, very close to new all-time highs. So Domino's Pizza also very strong here. Let's look here at the earnings estimates. They are much lower than Chipotle. So let's look at Papa John's. Here also very close to new all-time highs. They have a similar estimate here for the current year, and a very or smaller one for the next year here. So what are other interesting restaurant brands here? Shake Shack, I think that's a little bit down, so you can see it here in the RS rating, so it's only 42%. But yeah, a lot of restaurant stocks here, and let's sort it by the RS rating. So the first, or the strongest stock first. So that's a small one here. So let's look at the market cap. Is only 366, so a very small one, but strong growth numbers here. Then also BBQ Holdings here, close to new all-time highs. Kura Sushi, Good Times Restaurant. So a lot of small brands, and then the number one here, Chipotle. So a big, large company with a very good relative strength rating here. So if you sort the restaurant group here by relative strength rating, you have a lot of small business, and then comes Chipotle, and then also Papa John's. Noodles is also, I think, one of the stocks close to an all-time high here. Yes, also big estimate here for the next year. Big EPS estimate in the last quarter. Big sales growth in the last quarter here. Yum Brands, that's also a big company here, 39 billion. So you can see very steady and increasing sales growth here, but lower estimates for the next year. And then here, McDonald's, that's the stock I'm looking for. And you can see here also McDonald's very close to new highs here. And big EPS increase, 259%, and also the sales are increasing. Big estimate for 2021, so 49% here. And always have in mind, we're speaking here about a 180 billion market cap company and a smaller EPS estimate for next year. So you can see all those business in the restaurant sector are working. But I think personally, when you look at Chipotle and you compare that with a lot of other stocks, Chipotle has the best numbers here and also a very strong technical chart. So that shows you that there is demand and there are also institutions buying the stock. So yeah, that was my analysis about Chipotle Mexican Grill. So again, I think the restaurant business is changing, and digitalization and providing own delivery services, providing own apps and websites will help those big brands and to grow their business in the next years. I think the losers, or not the losers, but I think that third-party delivery services will not be the biggest winner of the digitization. I personally think big brands will be the big winner, because people want food from them. They don't want food from DoorDash or other companies. They want food from Chipotle. So, and when those companies are clever and they have good strategies, and the CEO also notice the change in the restaurant business itself, they will take the opportunity and grow their digital channels. And maybe a company like Chipotle will be able to grow their market cap in the next years with such a strategy. So if you like the video, give it a thumbs up. If you don't like the video, give it a thumb down. Leave a comment if you have any question or any feedback about the video. So you can follow me, of course, on YouTube and also Twitter and other social networks. If you want, you can subscribe to my free newsletter. I send it out every Sunday with trading tips and also 3 stock ideas from my personal watch list.